Hello there everybody, very good morning to you all and welcome to howtotrade.com and another live stream here in our trading room and across our YouTube, social media channels as well, including YouTube. I hope everyone is doing well on this Wednesday morning, and I'm hoping that today is going to be a little bit more action involved in the markets. It's been a little bit of a dry week, but that's okay. We'll work our way through it, and we're pretty much I think it's gonna be a good day to trade stocks and gold. I sort of when I was doing my week ahead analysis, I bookmarked today as a good day to trade that. So hopefully that will continue to be the case. It is very cold, very wet and dingy here in the UK this morning, and I hope everyone is having a good morning. And I've been letting people know, of course, now on the streams that this will be my last week of streaming. I know most of you probably know by now, but I know people do tune into different streams. So I'm going to be moving on. So Friday will be my last stream. So there's, including today, 3 more streams left. So, I'm going to keep them. I want to keep them still as they normally are. But it is a good time, really, especially if the markets are a bit quieter, to ask any questions that you may have, on the markets or whatever, and I'll be more than happy to answer them. I have to say, the thing that's touched me the most this week is honestly is the messages that people have sent through. I've just read the one from Bobby there, and honestly, that they mean a lot to me, because you forget sometimes that you are actually helping people, and I know trading's a hard game, and it's a tough game, and it requires a lot of staying power. A lot of people don't have, especially if you're trying to balance other jobs as well. So it's really good to see that at least maybe if you're not quite there yet, but at least I'm hopefully putting you on that journey to being the sort of trader you want to be and achieving your goals, and that's what means the most to me. So I appreciate all these messages that are coming through. Bobby, that's a really lovely message. Thank you so much. Dibble, hello to you. Also, another person who is always on my streams and stuff. So I really appreciate that. And sent me a nice message as well. R2GB, hello, good morning to you. And I hope you're doing well. And thank you very much for tuning in. I've noticed it's been a bit quieter this week. And I've got 12 more messages to reply to. So I promise you I will get through we'll get through them today after this stream. I guess I'll start getting through them. Okay, right. So we're gonna have a quick overview of what to expect today. We'll keep the stream nice and light. If there's anything anyone particularly wants me to go through, then that's probably a good time to do it, because I'm probably going to take after this week a slight break from the markets. Not a long time. But just maybe a few days or something. So I'm not really actively trading as such this week, but that doesn't mean we're not going to get some good opportunities. I will still mark those opportunities for you. Jeffy, hello to you. Good to see you. Hope you're doing well. Another person as well who's always been loyal to my streams and stuff. So yeah, hope you're doing well. Okie dokie. Right. So economic calendar today, slightly more to get stuck into today than there was yesterday and the day before, which was just so dry. But remember, and I said I will, I would have normally said this if I was here at Christmas, but the markets do quieten down over Christmas. If this is your first sort of period of time trading over this time of the year, people do slowly, the volatility just starts to tail off. So it's pretty much what we're doing right now is we're building up to that final Federal Reserve interest rate decision. And once we get that final interest rate decision, we're expected that volatility to sort of go bang, hit the markets. However, after that, we're probably expected the markets will just sort of tail off for that Christmas period, and you get those low volatility rallies. You get your big hedge funds and your big banks shutting off positions for the year, and that can cause sort of random spikes in volatility. The volume's quite thin, which can be quite dangerous. It's not really great conditions to trade, but we're not quite there yet, so let's not get too ahead of ourselves. But we are gearing up to that. We had the RBNZ interest rate decision out overnight. They decided to cut interest rates by 50 basis points and that moved their interest rate down from 4.75% to 4.25%, which was that was in line with the expectations of the analysts and the economists. It is a fairly big day for this week because we have got the core PCE price index, which is expected to tick slightly higher to 2.8% year over year. And then we've also got the GDP product annualized, which is basically the economic growth figures in the US. Now, in terms of volatility here, if we're looking for a stronger dollar today, then we should be looking at a GDP figure which is, maybe 2.9% or higher. So slightly higher would be a good recipe for some dollar strength. Couple that with a core PCE price index which ticks slightly higher as well. So if we get maybe 2.9% or 3% or something on the year-on-year figure, that's the sort of recipe that we'd need if you're going to get that continuation of dollar strength. Probably a bit of chop and churn if it all comes just in line. But if the figures come in slightly weaker, if we get a slightly weaker GDP and we get slightly softer inflation, that's going to potentially feed into a little bit of a reversal in that dollar strength that we've been used to, and will probably help the trades that are marked at the beginning of the week. And you can tell it's been a quieter week because I marked this fair value gap trade on Monday on euro dollar, and although it's running quite well, you can see that it's just been a period of consolidation, to be honest, really, since the markets opened on Monday, especially on the US dollars front. You can see that on the pound as well. It's filled the gap, and it's trying to make a move higher. USD Swiss francs making a move lower. Dollar yen has sort of been the one where we said yesterday about how that looks to me like it's starting to roll over, and it is rolling over actually. And I'm interested to see where this goes, to be honest, because this is quite a decisive move to the downside. And if I was going to mark sort of where the structure low and structure high is, it'd probably be from here to here. So from 151.3 up to 156.75. So I think we're actually on for, and you can see how much we're pressuring that low now. What I've got my eyes on is a breakdown below this low, and then potentially a lower high to be formed, and then a continuation maybe of this bearishness that we see in the dollar yen market. Now, with this sort of things that are going on today, the best markets really to trade off the back of this, like inflation and GDP stuff, obviously is the dollar as well. And I have got my eyes on dollar yen. Particularly, I've got my eyes on the a potential trend rider short. So if we can come up and test this area now, this is becoming a good short opportunity for dollar yen. But I like the look of the gold market or the commodities market as a whole, and you can see what was quite an aggressive move lower from basically on Monday. I mean, Tuesday was a bit of a recovery day, but if I'm following the market structure here, this should be, if the market structure is going to be, and obviously we don't just move in straight lines. Obviously, we might get a bit of chop and churn, but generally speaking, the structure's telling me that this is our new high in the market. This is our lower high in the market. So as long as the price stays below 2720, I'm actually bearish on gold. So I'm really looking for an excuse or an area in which we can go short. So let me just get rid of, I don't need the trend rider. Bit of a difficult one, isn't it? It's not, I mean, that is a really clean order block here. However, will it get that far? Potentially, it's only yeah. Well, we could get that far. Let's see if we can get a move down to there. Yeah, that's a pretty good trade. So yeah, I like the idea of potentially seeing a move higher in gold up towards 2680, and then seeing that as a resistance area. It's the best that I can find at the moment. The other alternative is that you probably do what Shane would maybe do, and that's maybe look for that 61.8 of that move, which is at 2660. You could look at that area. I don't really do that, to be honest, but yeah, any of your strategies or concepts that you can see that would maybe be able to get you involved in this could be a good one. I'm just going to quickly pause just to see if there's any other messages come through. Hello to you, Curtin. Good to see you. Thank you very much for the message. Hope you're doing well. Another one who's always been on my live streams, and yeah, unfortunately that is coming to an end. Okay, and then who remembers yesterday? When I marked potentially some trend rider longs on the stock market, because, and I'm not, the reason I sometimes use the trend rider is if the smart money concepts aren't clear to me, and I often find that can be the case in these sort of choppy periods, because look at that. It's such a grind. It can be quite difficult to really get involved. But you can see that we are just we've made that bullish crossover, and we are sort of seeing that being respected. Yesterday was a beautiful one on the S&P 500, which is moving okay, and potentially coming up to another retest now. So that was a potentially good trade. Now, in terms of the economic data today, and wow, look at that. What did we say at the beginning of the week? Fair value gap on the US 30 tested. That is just beautifully reacted there. So yeah, I'm still remaining very bullish on these stocks. Hopefully someone managed to get involved in that, because I did mark that at the beginning of the week. So in order for the stock market to continue its strength today, what we don't want to see is weaker GDP and higher inflation. Those two things coupled together, we may see a slightly, off day on the stock market. I don't think it's going to be groundbreaking. We're not going to fall to the floor, but we may see a little bit of a pullback. If we're going to continue this sort of grind higher that we've seen, then for me that would be a softer inflation print coupled with, an inline GDP, or maybe even a slightly higher GDP. That would be the ideal scenario for that stock market strength. So just bear that one in mind for today. Okay, and other than that, there isn't too much else to talk about for today. We have got some job data out as well in the US, so it's quite a good day for trading. To be fair, I know we've been a bit like, it's been quiet this week or whatever, but it is actually a decent day today. So I'm going to be actively looking and looking at this economic data that comes out and seeing if what I've gone through today, it sort of comes to life. Obviously, I will be active in the room, for the rest until the end of the week. If anyone has any questions or anything like that, I'm going to spend some time now going through these messages. Obviously, there's a lot going on in the background, sorting things out, and so I do apologise if I'm a bit slow on that, but I will get through those messages now. I've got about an hour's time to do that, and okie dokie, right. Thank you very much for tuning in today. Have a good trading day, and I will catch you all very shortly. Thank you.